Hi guys, let's continue with the next part of the lecture, that is the five financial statements. So what are the five financial statements that we have just covered in the previous lecture? So the first one is the income statement, right? The second one is the balance sheet. Third one is your cash flow statement. Fourth one is statement of changes in equity, and the last one is notes to accounts. So these are your five financial statements. So first let's try to understand what are these five financial statements, what do they talk about, and what is their purpose, one by one. So first, if I talk about the income statement, so this is nothing but what you guys used to call as a profit and loss statement or profit and loss account. Okay, so in your plus one, plus two, in your graduation, everywhere you have done profit and loss. So that is called as the income statement. Simple. So also known as the profit and loss statement. What does it show? It shows about the revenues, expenses, gains, losses of a specific period of time. Sir, why is it called a specific period of time? So for that to understand properly, I'll just open this. Yeah. So I actually gave you the links to the financial statements of major companies across the globe. So you have the links to Apple, you have the link to Amazon, Microsoft. So I have covered I have given you guys the links to the major ones. But sir, how do I open the link from a material or from a PDF or whatever? If it is a PDF, you can open, but if it is a flattened PDF, you won't be able to open it. So I'll just show you how you can access the financial statements of different companies. Okay, so first thing what you have to do is you can go to google.com, and what you have to do, you just search by the name of that company. Very simple. Let's say I want to look at Microsoft's financial statements. Microsoft Inc financial statements, just search by that. Very simple. Don't try to overcomplicate anything here. No need to overcomplicate anything. Okay, so the first link says www.microsoft.com, which is what I want for sure. I'm not looking at some other companies like Yahoo Finance or Nasdaq or anything like that. I'm going directly to the Microsoft company's website. This is one way of officially doing it. The other way would be to going to the nasdaq.com and finding the financial statements from there. Either are fine. Both are official reports only. So now if I go to the Microsoft website, so you can see here annual reports page has opened, and they have uploaded till the annual reports of 2023 as on date. So 2024 ended 2 months back, so it is yet to be audited and all that stuff. So they did not upload the 2024 annual report yet. So cool, no problem. This video is being recorded on the 22nd of February 2025. So it's just been 1 month and 22 days. So the financial statements of 2024 are not yet uploaded. So that's okay. So you can either have an option to view online, or you can download it as a PDF, whatever works for you. So I'll just view online for now. Okay, so Microsoft annual report 2023. So this is the CEO of the company, Mr. Satya Nadella. So he's giving some introduction about the company, AI, blah blah blah. All of this is information. There you go. There is the financial review. So they had some shares issued and dividends and stock performance related information. How much dividends they have declared. So yeah. Then how the company's stock is performing over the last 5 years, the share price and all that stuff. So what do they offer? So you have to go through all of this huge list of information that they are presenting to their shareholders. So okay, finally there is something called summary of results in operations. Again, this is not the financial statement, this is extracted from the financial statement. So you see what is the revenue over the current year and last year, how much growth is there, 7%, gross margin, operating income, net income. So only few selected areas. So this is segment operations, then this is research and development, general and administrative expenses. So each line item they are going in detail. Again, research and development, Okay, there you go. Financial statements and supplementary data. This is what we are planning to look at. We are trying to find. So here you can see this is what income statement. So then why are they saying statements? Because I believe, just a second. Yeah. So you can see here the second part of it that talks about the comprehensive income statement. And why they are using the word plural S here? Because they are presenting current year, last year, and the previous last year as well, right? Prior previous year, whatever you want to call it. So 2023, 2022, and 2021, they are giving you financial statements of multiple years so that users can compare and understand how the company is growing and all that stuff. So this is your Microsoft financial statements for 2023, and the first one is income statement. So let's go back. So see here. So the income statement reveals the company's revenues, expenses, gains, and losses over a specific period. So now let's understand what this means. Okay. So you can see the first section talks about what revenues means. What is their product sales, sale of their products like Microsoft Windows or Microsoft Office or project, Visio, all those things. Then sale of services and others, their Microsoft Exchange, Microsoft Defender services, all those additional services that Microsoft offers, OneDrive, etc., etc. So what is the sale of product related revenue and what is the revenue from services, and then total revenue. So the first part of the profit and loss talks about what? Revenues, right? The revenues of the company. Okay, understood. Next, the second is expenses. All right, let's see here. You have your cost of revenue. That means expenses related to the products, expenses related to the services, and other revenues. So the total cost of revenue, then once you subtract the revenues and the cost from the revenues, you get the gross margin. Basically expenses. You have your revenues here, you have your expenses here, then you have your gross margin. And apart from this, you also have some research and development, sales and marketing, general and administrative. All of these are what again? These are also expenses of the company. I hope you are all paying attention. So you have your revenues, you have the expenses, then you have your incomes or losses, whatever you want to call it. So the gains or losses. So again, what is the difference between an expense and a loss? Expense is something that you spend. Loss is something that is a result of an action. Like for example, I pay salary. That is an expenditure. I sold a property at a loss. That is a result of a transaction. Expense is something that you actually spend or incur, whereas a profit or loss is an outcome of a transaction. It is a result. Net gain or net loss, that is a result. Okay, now going further, over a specific period of time. Sir, why is it specifically mentioned and why am I stressing it? Because if you remember from your here, so if you remember from your what do you call, plus one and plus two, what is the caption for the profit and loss statement? Profit and loss for the period ending on 31st March 2023 or whatever it is. So here it is year ended June 30. Oh, Microsoft has an year ending of June. I wasn't aware of this. So 2024 June has been, it's been more than 7 months. So they should have the audited financial statements up by now. All right. So this is for the year ended June 30, 2023, June 30, 2022, June 30, 2021. So these are for a period of time. These are for 1 year from July 1st, 2022 to June 30, 2023. So 1 year for a specific period of time. Okay. So whether it is generating profit or incurred loss during a particular period, that will be identified by the income statement. Sir, we know the last line of the income statement would be PAT, net income. Whether the company made net profit or net loss. Obviously, Microsoft's a profitable company. Nothing to consider there. It's well-known fact across the globe. So now comes the expansion of it. Pay attention. So the income statement is further expanded into something called statement of comprehensive income or statement of profit and loss and other comprehensive income. So different names. It can be called a statement of comprehensive income or statement of profit and loss and other comprehensive income. It is a collective statement. Provides more comprehensive view of the company's performance. It goes beyond the traditional income statement. It also shows items like unrealized gains or losses on investments, foreign currency adjustments, pension related adjustments, blah blah blah. Okay, sir, what is this now? Understand? So when you are dealing with various currencies and all, you can have foreign exchange gains or losses also, correct? So for example, I bought a laptop for $10,000. So at 85 rupees per dollar, that would be $1,000 laptop. So if the dollar rate is 85 when I purchase the laptop, $1,000 means 85,000, correct? So I was supposed to make the payment 1 month later. When I'm making the payment, the dollar rate has increased to 86, from 85 to 86. So now what will happen? Instead of paying 85,000 for the $1,000 laptop, I'm now paying 86,000. That means I'm paying $1,000 extra. This is a foreign exchange loss, right? So there are certain items. In this case, this is a transactional loss. It will be in the profit and loss only. I'll talk more about that when we go later into the sections of A. Don't worry now. So there are some elements which are not a part of your regular P&L. Okay, so when a user is looking at the profit financial statements, he will look at this word net income. Okay, he will look at the word net income, and then they'll see that, okay, last year before last year it was 61, last year it was 72, current year also it is 72. So the company did not increase any profit in the last 1 year. The profits were same. Actually, it's $400 million lesser. It's $1 million, right? Yeah, in millions. So 400 million lesser profit the Microsoft company has made, which is bad for us and all that stuff. Not necessarily, because there are so many other factors you might want to consider as well, other than just the net income shown in the P&L. Sir, why, sir? What if there is some extraordinary item here which was not present in the previous year? See, for example, the product sale before last year it was 71,000, last year it was 72,000, and current year it is only 65,000. Why is it like how much is that? Approximately $8,000 million less. So what happened? Why did Microsoft lose that $8,000 million? Is that some kind of a set off, or is there some issue, or did they discontinue one of their products? So what exactly happened, we are not sure. In the profit and loss, at that level we don't know. We need to understand in detail. Once we read through the entire notes to accounts and everything, then we'll get a better idea of it. Okay, coming back. So this other comprehensive income, this part. So along with the income statement, right after the income statement, a comprehensive income statement will be issued. So what does this include, sir? This includes items which should not have impacted the net income. So they are presented separately below the net income. So users will look at this line, net income. That is why companies don't want to mess around with this line. So what they do, so they do not affect these, and they show some items separately in the comprehensive income statement. Sir, what are those items shown separately? So you can see here some changes related to derivative instruments, some changes related to their investments, so fair value of investments, then translation adjustments, foreign exchange related items. So don't worry, all of these are separately covered for you in your syllabus. So I'll talk about them later, not now. Okay, there are 4 items which are shown in the comprehensive income statement. We'll talk about them separately. Don't worry. All right, chalo, continuing further. Okay, I think I'm going a little overboard, because later when I go to each financial statement, again A1.1.3, I'll actually talk about each financial statement in detail. So I don't want to do that now. Let me give you an overview from here onwards. So the next one is the balance sheet. Sir, what does a balance sheet talk about? The balance sheets talk about your assets, liabilities, and equities of your company. So you can see here the assets of the company, then liabilities and equity. So liabilities, current liabilities, long-term liabilities, total liabilities, then your shareholders equity, total of liabilities and equity. This is basic statement, formula of equity you learned in your +1. So you must remember this from your +1, right? So assets is equal to liabilities plus equity, or equity is equal to liabilities subtracted from the assets, assets minus liabilities, however you want to call it, just transposition of that liabilities part. All right, chalo. So the balance sheet includes your assets, liabilities and equity, but the critical part here is the title of the balance sheet says as on a particular date. As on, sir, profit and loss is for a period of time, balance sheet is as on a particular date. That has to be very specifically understood, right? See here, a particular point in time, that is the difference between income statement and balance sheet. Income statement is for a period of time, whereas balance sheet is at a point of time, right? So you can see here, if I go to the balance sheet title, balance sheet as on June 30, whereas this is for year ended June 30. This is for a whole year. Comprehensive income statements are for a period, year ending, whereas balance sheet is on June 30, as on that particular date, right? So on 30th of June 2023, how much cash is there? How much short-term investments are there? Goodwill, intangible assets, this is consolidated, so goodwill will be there. Then you have your liabilities, long-term debts, equity and everything. So basically we are talking about on a particular date, as on a particular date. So it presents the company's assets, liabilities and equity. By analyzing the balance sheet, you can understand how liquid the company is, solvency and the overall financial health. Sir, what is liquidity? What is solvency? In short, liquidity means do you have enough current assets in hand or not? Cash and bank and other balances. Solvency means if your company is shut down right now, will you be able to pay the money back to the borrowers and back to your shareholders or not? So whoever you have borrowed money from, like banks and all that stuff, will you be able to repay them? Will you be able to repay your shareholders or not? That is called solvency. Overall financial health, what is your assets and liabilities, how much do you have and all that stuff, right? Next, the third one is cash flow statement. All right, so cash flow statement, the name itself is clear. It talks about the flow of cash during the period, correct? So how much cash we got from the operating activities of our business, day-to-day operations of our business, how much cash is either inflow or outflow, whatever it is, how much cash flow is caused due to financial activities, how much cash flow is caused due to investing activities. Sir, what are those? Operating activities, financing activities, investing activities. You see those three here: operating activities, financing activities, investment activities, investing activities. Sir, what are these three? Very simple. Operating activities means regular operations, sales, purchases, expenses, incomes, everything related to your day-to-day operations aspects. Then financing means your long-term borrowings, issue of equity, repurchase of stock, all those things. How do you finance money into the company? And repayment related to that. Investment means purchase of assets, sale of assets, long-term investments in the company, all those things. So in short, talking about the asset side of the balance sheet, financing talks about the equities and liabilities side of the balance sheet, operating statement talked about the income statement, your P&L. In short, we'll talk more when we go to the cash flow statement. So cash flow statement tracks the inflows and outflows of cash within the company during a specific period. Again, the title is for a period. This is year ending 30th June. So cash flow is for a period of time. During this period, how much cash inflow, how much cash outflow is there, right? Then it categorizes them into operating activities, investing activities, and financing activities. This enables the stakeholders to assess the ability to generate cash, how is it managing the cash flows, and what is the liquidity. So you see at the ending, we show the cash and cash balances at the beginning of the period and ending of the period. So at the beginning of 2023, they had $13,931 million in cash and cash equivalents, whereas by the end of the year, it is 34,000. So the liquidity has gone up a lot. A lot of liquidity has came into the company. And why did they get so much of money? uh, oh, they repaid some borrowings, it seems. Okay, common stock is repurchased, so they bought back the stock 22,000 millions, and they issued dividends of 19,000 million. So this is all cash outflow. Where did they get cash inflow? Maturity of investments is one thing. They must have gotten some good cash inflow. How did? Okay, they did not invest as much as they invested in the last year. No, that does not make sense. Yeah, maturity of investments is the one thing that I see. Like previous year, only $16,000 million was matured. This year, 33,000 million dollars. So they got that extra cash flow. But then they also purchased more investments, and they also added more property. Okay, I don't want to review that now. Why am I analyzing the Microsoft financial statements now? Let's not do that. So you can understand the liquidity, how much there at the beginning of the period, how much cash is there at the end of the period, and all that stuff. Then after that, statement of changes in equity. So name itself is clear. This is also called stockholders equity statement, also known as the shareholders equity. That's what stockholder and shareholder is the same thing. So don't get confused there. Shareholder equity and stockholder equity means same. Okay. Now, so what does it show? The name itself is clear now. Why are you worried about it? Name itself is very clear. Stakeholders equity means it talks about the changes that happened in the equity accounts. What are equity accounts? You have your common stock, which is okay, in India we call this as equity share capital. In US they call it as common stock. And then you have paid in capital. Paid in capital means paid up shares. In India we call them paid up shares. Then retained earnings, general reserves. Then accumulated other comprehensive incomes, other reserves. So you have your equity account, you have your general reserve and retained earnings, and you have your other reserves or other comprehensive incomes. So how much was there at the beginning of the period? Balance at the beginning of the period. How much is issued during the period? How much is repurchased? Are there any other expenses? Net. Then you have the balance at the end of the period. So retained earnings at the beginning of the period, what is the current year net income? Then are there any dividends, stock repurchased, and any other effective changes due to accounting changes and all? Then you have the balance at the end of the period. So basically we are doing a reconciliation. What was the equity account balance at the beginning of the period? How much is there at the end of the period? What caused those changes? So that's a reconciliation of statement of changes in equity. You can see here, it monitors the changes in the shareholders equity over a specific period of time. Again, this is also for the period, for the year ended, complete year, whole year. It reflects the effect of net income or loss, additional investments, withdrawals by the shareholders, any other factors. So this is all talking about which part? This part. New common stock issued, common stock repurchased and all. The statement helps the stakeholders understand how the ownership interest of the shareholders have changed over the period of time. So this is the critical thing. So you can see here, how did the common stock change over a period of time? So if you see in 2021, there were 80,552 million dollars worth of shares in the company, whereas at the end of 2023 that has grown to 93,718. So more number of shareholders are coming in, and the company is issuing further equity every year. You can see your common stock issued every year. Company is issuing equity, and also they are repurchasing the equity also. So they are buying back from some shareholders and issuing that to some other shareholders. And they are also giving stock based compensation. Stock based compensation means something like CEO of the company, they are also getting equity shares, the common stock of the company, as their salaries. So that is increasing every year. So Satya Nadella and others might actually take shares of Microsoft as a part of their salary. So that is increasing the number of shares in the company. So you can see 2021 they took $6,000 million as a stock based compensation, 7,500 in 2022, 9,600 in 2023. So every year their stock is increasing, their number of shares are increasing, because they are getting more and more shares of the company. All right. And last one is notes to accounts. You can see that notes. Sir, what is notes to accounts? So in here, let me just show you one part, and then I'll wind this lecture up. So if I just go to the income statement, it says product sales is 64,699. Last year it was 72,000 million, whereas this year it is 64,000 million. I'm reading this. I have no clue why there was such substantial fall in the product revenue. Almost all 10%, more than 10%. Why did the product revenue decrease by 10%? Let's see. So for that, what you have to do is you need to go to the notes, go to the revenue section here, product revenue and service revenue. So what it includes, product revenue includes sale from operating system, your Windows, cross-device productivity, collaborative applications, server applications, Azure, business solutions, desktop, server management tools, IIS, software development tools, video games, hardware, PCs, tablets, your Microsoft Surface and all, entertainment consoles, your PS, then other intelligent devices, related accessories, all of this comes under the product revenue. Then you have services from your Office 365, Azure, Dynamics, Xbox, all of these are covered under, oh I said PS, no, so PS is Sony, so PlayStation, my PlayStation is Sony PlayStation, Microsoft is Xbox, sorry, I switched that. And I hope you know that LinkedIn was already acquired by Microsoft, that is also a part of their service revenue. So now revenue recognition, what you need to do is go through this entire story, significant judgment. So there was some contract with the customers, blah blah blah. So there is something that is happening there. Here you have some doubtful elements related discussion, your provision for bad debts related. So again, yeah, you might want to go through all of this story to understand why the revenues have decreased. There will be some other references also. So for example, here you see they are saying refer to note number 13. So again, you'll have to scroll down and refer to that note number 13 to understand what happened there. So this is note number 4 related to investments. Where is note 13? Okay, I don't want to search that now. You guys have link to that, you know how to access that. I'm scrolling already, note 11. Okay, sorry. Note number 13, unearned revenue. So here, so there is some unearned revenue for the company as well. Unearned revenue means money received in advance but sale not yet completed. So this is a liability for the company. Okay. Alright, so I don't want to go through in detail about that. I don't want to review Microsoft financial statements in the class. So I hope you understood what is notes to accounts. It talks about all the extra information, additional information that you need to know to read the financial statements. So see, also known as the footnotes of the financial statement notes. So they are also integral part of the financial reporting. Without them, financial statements are not completed. So they provide what? They provide additional information and details that complement the information which is presented in the other financial statements. Notes enhance the transparency and understanding. They provide important context and explanation. So basically whatever is already there in the financial statements, more details related to that is given in the notes to accounts. Correct? Yeah. All right. So I'll wind up the lecture at that. So in the next video, we are going to understand some basic elements related to the preparation of financial statements like accrual accounting versus cash based accounting, the various frameworks across the globe, just a small discussion. All right. I'll see you in the next video. Keep smiling. Take care. Bye bye.